Good afternoon, everybody. This is Trey getting back in touch with you from Japan. Today, I wanted to share another personal investing story with you guys about my first IPO and my first IPO failure. In one of my earlier videos, failing is a really good way to learn stuff. So I wanted to share a little bit about one of my failures so that you can learn. This is a little story about a small company called Facebook, which IPO'd in May of 2012 for 38 bucks and promptly spiked right after that. At the time, I had zero experience with IPOs. I didn't really know yet what I was doing when it came to investing in stocks. My friend and I were just playing StarCraft, and we're like, dude, IPO, you can make all this money, bro. And so I just went and bought some Facebook. I think I got my order in at something like 45 bucks. I didn't get it at the 38 bucks it launched at. And what ended up happening after that was really interesting. Basically, Facebook was a thing that had already been around for years, but nobody knew how they were going to monetize it. This whole social media thing was brand new, so nobody really knew it would become anything like what it has become now, or social media in general would become so life transforming for so many businesses in the future. And so it was kind of like, oh yeah, we can get in on the IPO, we can buy some stocks, but how are they going to make money? This isn't like a store where you can like buy shirts or shoes or something, or cars. It's just pictures of your friends. Maybe it's not going to go so well. And so there was a lot of hype around the stock. And like I said, I got in and then watched it slowly melt down from like 45 bucks to like 40 to like 38, 35, 32. And I'm like, dude, I'm going to blow all my money. It's going to just shrivel away and disappear. And so my friend and I are watching and he's like, oh, dude, like, don't worry about it. It'll be all right, whatever. And I think he had done a little bit more research than I had, first of all, but he had also thought about the long-term vision. And so one of the things I wanted to mention for especially new investors is that it's really, really important, especially in times like this, to be thinking about the long-term perspective of a company. For like 99% plus of investors, you cannot be caught up in every day's headlines. You cannot be caught up in the day-to-day price action. And actually, you're gonna like lose sleep and then eventually lose your health and then eventually lose focus on the things that you need to be doing every day at work or in your family if you get too caught up in those things. Unless you're a day trader, then it's different. I had not done the research on the long-term perspective of the company and maybe how they might monetize things in the future, or maybe how they might grow into becoming like one of the biggest companies ever right now. And so I watched my investment kind of melting away before my eyes, and then I panicked. I was like, dude, it's already gone down from 45 to 30 bucks, dude. If it goes away, I lose everything, and this is the end. And so I panicked, and I ended up selling it at like 28 bucks. I think it ended up bottoming out at like 17 or 18 bucks, something like that. And then eventually from there, it went on a steady march all the way up to where it is now at like 240, 250 or whatever. According to this article on Investopedia, if you purchased $10,000 worth of shares right at the IPO, your investment would now be worth $53,000 in May 2020, almost exactly 8 years later. That's a compound annual growth rate of 23.3%. If you had waited longer to buy it right when it hit its low at $17.73 in September, your $10,000 would now be worth $116,000. That's a 37.6% compound annual growth rate. And my mind wasn't in that long-term mindset. I mean, I wasn't investing $10,000 or anywhere near that because I was just kind of getting my feet wet with different things. I was like, this is my first IPO. I don't know what that even really means, kind of thing. And so all that to say, please go into investing with a long-term perspective. And number two, do a little bit more research on how things could possibly roll out over the coming years, how they could play out in the coming years and months. And when you strongly believe in the thesis of a company and how it can grow, you don't actually need to be too worried about things dropping by 20 or 30%. In fact, if you really believe in it, you buy more when it gets cheaper. And so I just wanted to share with you guys about my own failure with the Facebook stock back in 2012. I want to hear a little bit more about your failures. Tell me a little bit about a failure and how it helped you grow into becoming a better investor. Feel free to join us in the comments here. And also in the description, I'm including a link to our subreddit where we can continue even more conversation in a format that's a little bit more accessible on the go and easier to have long conversations with multiple people in them. Thank you guys very much for your time. Have a great day.